Ladies and gentlemen, distinguished guests, thank you very much for giving me the chance to open this second day and the last one of this forum on remittances. I think it's a truly important subject, and I'm glad that all of you could make it to the HQ of ADB today to be part of it. I have to thank also Bruno Carrasco and his team for putting this together, but also for thinking of me while doing so. I didn't reveal this to him or to the others, but I am a product, very much a product of emigration and remittances. Just like the millions of Filipinos, Indian, Pakistanis, or Tajiks, we heard about them yesterday, to name just a few. So this means that my interest in the subject has much more affinity with it than perhaps a deep understanding about what you can do with the monies. Despite this, I will try to share some observations about things we could do together. But like the many thousands of people who are checking their bags right now at Ninoy Aquino International Airport, like you will maybe at the end of the day or tomorrow, as we speak, my parents who emigrated did so to do three things. Number one was to send money to send the children to school. Number two was to look after their parents and the other siblings. And number three, quite important, was to save money to start a business. They achieved all these three things, but unlike those who are boarding the planes today in the direction of either Dubai, Qatar, Saudi, Hong Kong, Singapore, or even New York, my parents operated with an advantage and with differences. First, they could send money rather easily, largely because the banks where they worked had branches that made it easy to do so. In fact, a local account supported another one in the recipient country, and both were used for normal banking business, but also for savings. The savings products were fairly sophisticated, as indeed were the banks who came to chase this business. In fact, a lot of them made a lot of money out of it, and rightly so. Second, in the recipient country, the monies were used aggressively by governments and by corporations to support investments. And I guess that this was a major contributor to the development of infrastructure, public services, the creation of companies, and ultimately the creation of jobs. Jaime Ayala referred to this yesterday, how important it would be in the long term. And the economic growth then became broad-based. Consumption was accompanied by investment and the establishment of successful industries, which, by the way, later on employed the children of those who emigrated in the first place. And last and not least, another difference is because of the things happening in the real sector, the time that my parents had to spend abroad was less than 10 years. I've no idea what the average time that migrants today spend out of their countries, but I bet you that it is not this short. I think the way remittances were used helped to reduce the time that they had to be away from home. Anyway, let me get back to the subject for today. I'm sure you're waiting for it. Yesterday, just a recap, you focused on the impact of remittances on poverty reduction, on the measures to increase their flow, and on the type of technological platforms to remit, but to manage the funds. Today, we're going to change course. And in the sessions that follow, we will look more closely at the type of transactions that are being used by governments and corporations around the world. Transactions that shift remittances into investments and create savings vehicles. One very revealing piece of information is that these instruments are hardly used in Asia. And I'm sure the speakers and the audience will share some of the reasons for this to be in the case. And without preempting these deliberations, I guess that some of the reasons were already put forward yesterday by Jaime Ayala and Nestor Espinilla. You will recall that they made references to three interconnecting factors. The first is the banks and other financial institutions are lagging when it comes to tapping, remitting, and using remittances. Secondly, that the innovation pockets exist, but that they're just pockets, they're not mainstream. And they will remain like that unless mainstreaming takes place. And three, regulation is not flexible enough with those who are regulated, but is far too flexible with many who are not regulated at all. Now, with respect to the type of transactions that are being used elsewhere, and quite successfully at that, but not really in Asia, I'll just share two examples. The first, and you will hear more about it today, is the capital market-based remittance securitizations are one such example. This concept is widely used in Latin America and closer to us, in Turkey, maybe not that close, Russia, but certainly in parts of Central Asia, and I understand that also in Africa. The concept allows issuers to raise in various capital markets funds by pledging future hard currency remittances and export receivables, I may say, as collaterals. The product has come together with fairly low spreads and low volatility in prices. So you need to figure that out as to whether we can put it together in the Asian context. A second example of a financial instrument or transaction is the diaspora bond. Israel and India, more recently, have opted for this debt instrument very successfully, and they probably will continue to do so in the years ahead. These instruments have tended to be used by the recipient governments, but also by companies, by targeting their diaspora. So it's a concerted and beautiful marketing effort that they put together. In countries like the Philippines, I'm sure this type of instrument could easily become part of a fundraising strategy, maybe not to replace much, but definitely an option, among others, used on a regular basis for the purposes of funding investment programs, but also the fiscal needs. The issue at hand, of course, is not how to come up with clever instruments that are credible and meet the highest consumer protection standards. The big issue at hand is how to remove bottlenecks on the way to expanding the business into this space. And here, I hope the discussions today will shed some light on what can be done and who should do it. Again, and without preempting these discussions, my guess is that the development of attractive investments and saving schemes will require the following. Number one, a close partnership between the regulator and the financial institutions. That was highlighted by both the Deputy Governor and Mr. Ayala yesterday. It will require a huge marketing effort by the banks to reach out to the diasporas. Three, we will need concerted efforts around financial literacy. If you do a diaspora bond from Israel and you tap New York audiences, you have sophistication galore. We can create that too, but we have to work on it. And it is not difficult, but it is work. And finally, we need consumer protection, which I mentioned earlier. This is not blood money, just to repeat a little bit what was in a film not too long ago. This is money that has tears and sweat. So looking after those who are sending it, and for those who issue and invest with us, is a critical success factor. But it has more than that. It has morality all over it. No pyramid schemes around this. Now, not all remittances will end up in savings schemes or in financial instruments of the nature that I just shared with you. Many of the funds will still go directly to families to help them make ends meet. But over time, the market will inevitably become more sophisticated, and no more so than in Asia, where most countries will be middle-income countries and upper-middle-income countries. But I also venture to say that the recipients of these funds themselves will start considering specialist savings schemes, insurance schemes, as indeed some of them do today. And this effectively will mean that more and more money will enter the formal system. Now, let me touch on what ADB could do. And without going into enormous detail, the team will share this with you later on. I think the first and the most important thing that we can do is to become a partner of the regulator and of the banks. And we can help in many ways. We can help to define, set in motion, and even fund the cost of adjustment associated with reforms. We can underwrite or guarantee transactions that lift the quality of issues into credible rating territory so that the cost and tenors are attractive to those investors. We can provide financial literacy programs, put them together, fund them, execute them, and we can do pilot schemes, innovative ones, with those of you who have appetite to do so. ADB has the experience, a presence in many of the countries where we work, practically all, 29 offices network, and a team of dedicated professionals, many of whom have actual expertise in putting together transactions of this nature. Certainly, experience in financial inclusion, as many of you know. We have credibility, a brand name, and a long-standing relationship not only with the countries, but with the financial institutions and the central banks and other regulators. And above all, we're open for business, and we would love to start discussions with you, especially if you have an idea that we can bring into practice. So let me close by thanking you for being here and thanking you for your active participation in the forum. You have some heavy sessions coming up now during the last day, and I will not detain you any longer. But I especially look forward to the one which I think is the last one where you're being asked to put together a transaction, as it were, from scratch. I think this is a terrific idea, apart from making you work, so that you don't have to listen to people like me for too long. But maybe one of these ideas could be converted into the first ADB project post this forum. Enjoy your stay, and thank you all for your attention.